31 of our 72 participants online, so I'm going to get started. So, hi everybody, and welcome to our sixth Perspectives by AirInsight. I'm Fiona Mackay-Reddy, and with me here I have Ernie Arvey and Addison Shonland, the founders of AirInsight. Big welcome to our returning guests, and also thank you to all of our newcomers. We've got a lot of new faces today. So because of that, I'm just going to go through a few logistics. So I have put most people on mute to avoid background noise. Anybody who's joined on the phone, just want to let you know that we are sharing some slides, so you might want to switch to your computer. Also, we will be making a copy of these slides, and the recording will be shared on the subscription area of airinsight.com. There will also be an opportunity for you to ask questions of today's guest at the end of the webinar. You can put forward your questions using the chat bar. So if you hover over the bottom of your screen, you'll see that the chat icon comes up. And at the end, we will gather those questions and then open up for a group discussion. And just so everybody knows, I am recording right now. So if you're not happy with that, now is the time to log off. Now, today's topic is about aircraft valuations and how we can expect that the changes in aircraft valuations could actually impact the whole aerospace ecosystem. Our presenter today is Gueric Dechavanne. Gueric is the head of commercial aviation services and also a part owner of Collateral Verifications. He is an ISTAT certified senior appraiser and a graduate of Embry-Riddle Aeronautical University. And I asked him about his wildest aerospace memory before we got started today. And he shared with me that he once impaled a small Cessna with a trailer when he was working as a fixed base operator at a small airfield. So I'm sure his driving skills have improved since then. And so I'm going to hand over the steering wheel to Gueric, who might need to come off mute.
Yep, absolutely. So thank you, Fiona. I appreciate the intro, and certainly I love that little story, which, you know, kind of it's a nice little embarrassing story, but it all ended well in the end, where, you know, the aircraft owner got a newly refurbished airplane. But in any case, thank you very much for allowing me to be on the call today and kind of share some of my views of the industry. And you know, certainly look forward to the discussion at the end. I think that's how I feel you get more out of these types of webinars in the end. So, but why don't we get started? And so the title that I've kind of put on this presentation, as well as some of the other things that I've done, is the Great Reset of 2020. And when we look at kind of where we are today and what's happened over the last 60 days or so, you know, I think it's very fitting for what we're going through right now, and what will potentially happen going forward. And so, you know, a lot of the discussions that I've had over the last, you know, 30 to 45 days have been around kind of what am I seeing today? You know, how does that compare to previous downturns? What do I think is going to happen going forward? And although there's definitely a lot of focus on, you know, maybe what valuations have done in previous downturns, I think that it's very important to keep in mind that each downturn is somewhat different from one another. And so, you know, because of that, I think it is important to kind of look to see where we are today, and what are the things that are materially different from some of the things that we've seen, you know, after 9/11, after the Gulf War, after the financial crisis, just because obviously those will, going forward, impact the industry in a different manner. Although some of the value declines may be similar, I think that the fact that this is somewhat of a different crisis that we're dealing with today, because it is a crisis that's been impacting the global industry, not just one region versus another, will have, you know, certainly a different impact on aircraft valuations and lease rates going forward. You know, few of the things that I've looked into in terms of some of the major differences from previous downturns. You know, I think when we look at things like interest rates and fuel that will impact specifically aircraft that are, used aircraft. Typically, when we're in a fuel environment that's, at record lows, low interest rates, that has a potential for impacting used airplanes in a different manner than previously, where normally you would have airlines, if you're in a higher fuel environment, they'll kind of focus on some of the newer assets, whereas in a lower fuel environment, that's less of an issue. So, things like that is certainly something that is somewhat materially different than some of the previous things or the previous downturns. So again, we'll one of the, I guess I'll kind of shift focus a little bit just to keep things moving. But, the current environment has definitely brought a lot of challenges when it comes to the valuation of assets. And I think over the last 60 days or so, where typically appraisers will, try to reflect what's going on in the market by looking at, asset trades or aircraft leases or whatever data points you can gather. With the fact that the industry came to a grinding halt, it's been very challenging to actually find a wide array of data points that you can go off of to be able to say, hey, look, this is where aircraft are trading, this is where the leases are being done. And so because of that, I've tried to approach the kind of valuing of aircraft in somewhat of a different way, trying to find, certain indicators that would help in the valuation of aircraft. And so a couple of things that I've done to try to get a sense for where valuations of aircraft are going is, looking at aircraft from an investment standpoint and looking to see when I talk to investors, there obviously are certain things that they focus on, and these, various factors will adjust the valuation that they're willing to pay for assets in different ways. And so three of those things that are kind of main factors in my view are, the airline credit risk. So when you're looking at, as an investment, whether it's the rate of return or the discount rate that you're going to use, a lot of that certainly focuses on the credit that you're dealing with in terms of how you're going to adjust for that. If the airline is viewed as riskier or less, then obviously that number will be adjusted up or down based on what your cost of capital is, plus what your expected return is going to be. Over the last 60 days or so, I think it's been very apparent that the airline credit has gone up substantially, and so that, in my view, will impact how aircraft will be valued based from an investment standpoint. And so those are some of the things that I've tried to take into account to adjust the valuations. For anybody that's familiar with doing a present value analysis of an aircraft with the lease attached, right? Obviously, if your discount rate that you use goes up and everything else stays the same, the pricing will go down. And so that to me is a kind of a preliminary indication of where values could go as investors start to look at putting their money towards aircraft with leases attached. And so that's one of the ways to try to determine where values have gone. Secondly, if you look at monthly lease rates, which obviously is going to kind of look at the cash flow that the aircraft can generate, those, depending on how that changes, again, if it gets reduced, then the pricing that you're going to be willing to pay for the aircraft will go down. In the current environment, there's been very few lease rate data points that have been put out there. I think most of the lessor community has been focused on kind of the communication with the airlines, looking at lease deferrals, rent payment deferrals, and so kind of less focused on trying to find new homes for aircraft that may be coming off lease. And of course, in the current environment, I think it's also very telling that most airlines are not necessarily focused on the aircraft that, adding any additional capacity. I think at this point they're looking at, how do we reduce the capacity that we have to be able to better meet the traffic demands that we think we're going to have in the future. The last piece to that is when you look at the residual value of an aircraft. And specifically with used aircraft, the part out value is very often used as a kind of worst case scenario. Hey, if we get the aircraft back, we don't want to put money back in. What can we part it out for? And so to me, that's a great indication, again, when you adjust that downward based on what part out firms are willing to pay for aircraft, what does that do to the overall value of the aircraft? And so, over the last few months, there's definitely been some data points out there from some of my sources that going to show me where their pricing, where their prices have gone in terms of the various aircraft that they're looking to invest in. And so that, again, provides a good indication. And until we start to see more transaction data that becomes available, to me, I think that's a good way of trying to determine where the market is going from a valuation standpoint. One of the things that I've also focused on is looking back, right, and looking at previous downturns just to provide some guidance. And so I thought it was interesting to kind of go through and look at the previous downturns, meaning after the Gulf War, during 9/11, after the financial crisis, just to see in general terms what how aircraft potentially declined. And so if we look to the slide, obviously when you're focused on whether it's out of production single-aisle aircraft or in production single-aisle aircraft, you can kind of see some of the differentials where depending on the crisis, right, where that focus will be. If we focus, let's say, on 9/11 versus the financial crisis, you were seeing out of production anyone from 21 to 47% declines, and a lot of the declines are going to be based on the age profile of the aircraft. Obviously, the older aircraft will tend to see a larger hit, and so that's kind of how the ranges would work. Versus in production aircraft, where you saw certainly a steeper decline in values, which is something that we may expect to see going forward, just because ultimately the long-term viability of the current in production aircraft versus at production aircraft typically will be better than one than another. So that's kind of gets to show you a little bit of what happened during that point. And if we look at the next chart that I had put together, that also kind of shows you how lease rates were also impacted during the previous downturns. Typically, what I find is that normally the lease rates will be adjusted initially, and then the values will then follow in terms of the potential impact. There's always a bit of a lag between one another, and if you look at the trends, the lease rates are also typically impacted a bit more than the values, but there is a better chance for the lease rates to recover faster than the valuations as well. So this could give you kind of a good indication of what occurred. Downturns, what's interesting is, in some cases, if you look at, let's say, after 9/11, you had some of the older aircraft that lost as much as almost half of their lease rate, which is somewhat substantial. If we kind of, as a comparison in terms of what's going on in today's market, as I said, there's very few lease rate data points that are out there in terms of knowing ultimately where lease rates are going to go. I think a lot of that will be tied to how airlines will need to reduce their costs, and I think when they start to show what the reductions need to be in their operating expenses across the board, I think that will be tied to how lease rates will need to then be potentially restructured. At this point, what we've seen in the market is more of a the lease deferrals or lease payment deferrals are great in terms of for the airlines. It allows them some time to get reorganized and figure out where things are going to go. But in the end, is that going to be enough for the airlines to, after 3 months or 6 months, depending on how much deferrals they've had, are they going to be satisfied with going right back to paying what they were paying, pre-crisis? And my opinion is that that's probably very unlikely going forward, especially based on the message that we're getting out there from the airlines that they're looking to come out into the recovery period, hopefully at the end of the year, with a much smaller operation with reduced costs. And so that's going to be across the board. So I think that there's going to be a further impact to lease rates going forward. It's just, at this point, they were just kind of on a rent holiday at this point. So we're not seeing a lot of that. If in terms of some of the value trends that I'm currently seeing today, and again, keep in mind that this is based on, some of it is going to be tied to the different indicators that I've talked about, whether it's on the credit side or the residual side, as well as a few data points that are here and there from people that are either looking at transactions, and so they're seeing where aircraft are being offered, or for some of the few that have actually been completed in the last 60 days. And so based on that, for the, out of production single-aisle aircraft, at this point, you're seeing anywhere from 6 to 30% declines in the valuations. And again, that's going to be tied to, a lot of it is age-based. So the younger vintages will be impacted slightly less than the older vintages, which at that point, you start getting more into the part out scenarios for these aircraft, and they're going to be less likely to stay in the fleets. In production single aisle, again, kind of that 3 to 10%, in terms of for some of the depending on the younger vintages, and a lot of that is tied to, I think, some of the changes in the credit profiles of the airlines. For the out of production twin aisle aircraft so far, anywhere from 18 to 35%, which a lot of that is going to be tied to, I think where some of the credit ties to that, but also on the residual side, with the lack of demand with certain types, that's going to have a greater impact going forward. And in production, you're seeing kind of that 3 to 14%. Now, that's not to say that this is all that's going to happen going forward, but this certainly provides you with an indication of kind of what's already being seen in the marketplace. And so that's what I'm trying to reflect here. I think one of the other interesting points, and it's certainly been talked about quite a bit, is when you look at aircraft that have been aircraft storage, and a great indicator of where how the potential downturns could compare from one another is certainly when you look at how the supply of aircraft is being affected. And so when you look at where the stored aircraft numbers have been in previous downturns versus now. And if we look at the next chart, we can see that where if you look kind of during the 9/11 period, right, we were coming into 9/11, with about just over 6% of the total fleet that was stored. During the next few years after 9/11, we're in that 10 to 11%, and then kind of starting to decline after that, which is when we start to see the recovery. During the financial crisis, right around that 7.5%, and again, kind of moving into that 10% of the fleet. And 2011, when you start to see some of that recovery. What's interesting is when you look at kind of where we were prior to this crisis, and I looked at kind of the end of 2019, the percentage of aircraft that were stored as a percentage of the total fleet was slightly higher at about 9%. And I think, a lot of that, when you, if you were to try to balance that out in terms of, well, why is it higher now than in previous downturns when, 2019 was viewed as such a high in our industry. I think if you look at the fact that there were some 737 Maxes, obviously when it's quite a bit of aircraft that at the end of December were labeled as stored. So that kind of distorted that number slightly. And when we compare that to where we are today, as of May 1st, some of the CH Aviation data shows that we were at 59% of the total fleet. So it's a slight bit of a difference from previous downturns. Now, obviously, that doesn't kind of show you ultimately what will be stored when aircraft kind of start to go back in operations, but it's certainly an indication of where we are today in terms of coming to a grinding halt. And I think when you look at the number of aircraft that are currently parked and you tie that to aircraft that are being flown today, I think traffic is down something like 95% in a lot of regions. And so even though there is some indications from certain regions that aircraft are starting to fly again, I think that what I find more interesting is not necessarily which aircraft are flying, more so how are the load factors on those airplanes. And I think at this point the bookings are still quite low, and load factors are also still quite low. So we're not quite there yet in terms of going in the right direction. So the last couple of slides that I put in there, I thought it was interesting to kind of see when you think about kind of the aircraft storage and what kind of costs are tied to that from an airline standpoint. And so if you look at the total fleet, and this kind of takes into account the long-term storage costs, which my understanding is that for most airlines, kind of once you get past that 30-day window of aircraft being stored, you kind of have to put the aircraft in some type of long-term storage. And so these represent kind of average long-term storage costs, and shows you in terms of when you're inducting an airplane into a storage program, what the cost would be tied to that, as well as the monthly costs, obviously by region in terms of what they're dealing with potentially from a storage cost on a monthly basis. And then once the aircraft start to be able to operate again, what the reactivation costs would be tied to that. And then my last slide just kind of shows some of the US major airlines and what some of the differentials are between their fleets. And so I thought it was just kind of an interesting view in terms of it's one thing to say, hey, you know what, all aircraft are stored, and so they're not necessarily costing airlines anything just because they're not being operated, but there's certainly a cost to that. And I think, from an airline standpoint, you have to look at, not only what your monthly costs are going to be, but also your reactivation costs. And tied to the reactivation costs also comes into play the resources that are available there to actually get your airplane out of storage. And when you're looking at the numbers of aircraft that are stored at certain facilities, it makes me wonder, if there's going to be any kind of a bottleneck effect. Should we have any kind of a slight surge in recovery where airlines start to have a need for certain aircraft? How do those storage facilities kind of manage that to be able to get the airplanes out as quickly as possible? So I'll kind of leave it at that. And I think at this point, we'll maybe try to open up for some questions and I can answer those.
We've had quite a bit of chat in the chat bar.
Yes.
So the first question came from Ernie Ivy. So the MAX is currently unable to fly, and there are nearly 800 aircraft on the ground that will need to come back into the market. With a large inventory of aircraft and a market that currently doesn't need them, how low will MAX values go, and can Boeing afford to build more?
And that's a very valid question. I mean, I think there's been so much unknown around the MAX program for the last year plus. And I think, it's going to take for the aircraft to get recertified, I think, to get a better picture as to ultimately who is going to take the aircraft. And I think Boeing's got quite a bit of work to do to get the aircraft back up in the air. And then obviously try to deliver the 400 plus aircraft that have been manufactured but undelivered. And there's still a lot of unknowns in terms of how many of those aircraft will actually be delivered to the operators that initially placed the aircraft on order, and will those become whitetails that need to find homes. So I think when it comes to the MAX and how low values will go, there's still a lot of unknowns out there. So it's kind of challenging it's hard to answer that question just because we don't know once the aircraft gets recertified, and that obviously we need to know exactly when that's going to happen, when aircraft start to get delivered to go into service, how quickly will that happen? Will that put a large supply of aircraft into the marketplace, and therefore does that affect used aircraft values, or will there be a delay in terms of getting those aircraft back into operation? Where will fuel be at that point, which that will obviously have an impact on how values will be affected. Excuse me. I think that the definite impact is initially going to be on, I think, aircraft lease rates for those lessors that do have aircraft that are available, whether it's through an unfortunate default situation where now they have to take delivery of an aircraft that's been built but not going to the initial operator, but they need to find a home for it. How low will they have to go? Before even before the financial crisis, I think lease rates were, prior to the grounding of the aircraft over a year ago, right? I mean, lease rates were already starting to be quite low, under the $300,000 a month range, just based on the fact that there were quite a few lessor slots still available for 2019 and 2020. I think over the last 12 months or so, Boeing's worked pretty hard to be able to manage those slots that didn't necessarily have homes, to push them out and defer them. And so I think that will hopefully help with the available supply of aircraft that need to find homes in the near term. So unfortunately, it's not an answer in terms of how low will they go, but there's still so many unknowns in terms of the timing of when the aircraft will actually become available.
And the next question is from Addison. Lufthansa Technik has its first A380 for cargo conversion. What might this mean for that model in terms of value?
I mean, I think the A380, unfortunately, it's been an airplane that over the last couple of years, you've started to get a sense for where the market was going for that airplane, which was down. And, it was one of I think the first few aircraft that was actually, parked during this crisis. And so there's a lot of questions as to how many aircraft will actually go back into service. I think initially the aircraft wasn't necessarily built as a production freighter just because of some of the structural issues that were potentially with the aircraft. And so it'll be interesting to see what kind of cargo conversion the aircraft will have. I would say that it certainly provides an alternative for the aircraft. And so as used aircraft become available, the worry with conversions is always, is there going to be feedstock to be able to feed the demand for the cargo conversions? And, I think based on some of the aircraft that are currently being parked that may not return to passenger service, I think that there could be a good amount of feedstock available to be able to do that. So if Lufthansa is able to provide a viable solution on the freighter side using an A380, and it's still viewed as somewhat economical to do the conversion, using as well as the pricing on the feedstock, I think there may be some demand for that aircraft going forward.
Our next question is from Isaiah Cox. Not sure which slide he's relating to, but he says, those are relative costs. What are the costs per plane?
And I'm assuming maybe talking about the aircraft storage costs.
Isaiah, could you clarify?
Yes. The slide that's up right now, I see a dollar value in the left. We know it's millions of dollars, but as far as I can tell, it's really a relative value, not an absolute value. So on a per aircraft basis, what does it cost to induct, store, and then reintegrate an aircraft?
So the feedback that I've gotten on the storage costs, right? If you look at for narrow bodies, on average, you're looking at an induction cost that's going to be around the $18,000 per aircraft range. And in terms of the monthly storage, you're looking at about for the parking of the aircraft, including any checks that would be due during that monthly period, it's about $4,500 per month. And then the average reactivation cost would be around $22,000 per aircraft. And that's for narrow bodies. On the wide body side, the induction cost is about $25,000 per aircraft. Monthly parking is a little over $5,000 per month. And then the reactivation on average is about $35,000.
So this is for, you giving me a kind of a US average, or which airline? I'm sorry, I missed that.
So this is just an average per aircraft, right? So when I put the data together, I just look to see by airline which aircraft were stored, and then kind of applied the different average costs on a per aircraft basis, whether it was a narrow body aircraft or a wide body aircraft, and then just looked at the sum of that.
Thank you. It's great.
Mm-hmm.
Got a lot of questions coming in now. Okay, so Richard Sherman, how do you rate the Embraer E190? American and Air Canada have announced early retirements of older aircraft, but at the same time, smaller types might be the thing to have.
Yeah, I mean, I don't disagree with that. I think when you look at previous downturns and when the market starts to recover, airlines will tend to focus on some of the smaller aircraft to be able to have the right aircraft for the demand that's coming in. And so if traffic starts to come back slowly, I think that smaller regional jets will tend to do better, just because, why would you put a larger aircraft that you can't fill that's going to cost you more? I think that some of the the concerns that we've seen over the last year or so, or a couple of years on the E190s has been on the maintenance cost side, where the engine overhaul costs for the aircraft are quite expensive. And so I think that's what potentially is driving some of that with the decisions by American and Air Canada, is that I think some of the aircraft are probably reaching a point where some of the heavier maintenance that's due is quite costly. And so for them, it's better to focus on other aircraft that they have in their fleet that may not necessarily be coming up to that. And so, I know that from the engine side, GE, has come out with a campaign on the CF34s to be able to help with those costs, where they're offering some reduced cost packages to be able to handle the heavier shop visit costs that the airlines have seen. But it's still, unless you're on that program, right, it's still somewhat of an expensive aircraft when it comes to that. And so I think that's what's driving some of those retirements from their fleets. It doesn't necessarily mean that those aircraft will come out completely in terms of being used as passenger aircraft. I think other airlines may step in and see some benefit to used aircraft. I think for David Needleman's new airline Breeze, I think they had talked about using used 190s or 195s coming out of a school to start to fill their capacity needs. So I could see other airlines doing that, especially those that have a decent fleet of aircraft that where they have enough material and spare parts to be able to support the fleet without having to go to the market for that. So I definitely agree that on the regional side, there's typically they tend to fare better initially as airlines kind of use these aircraft to meet the capacity requirements that they have as the recovery starts to occur.
And Jim Bowden is asking, how can I get the storage related costs for US carriers, including return to service costs? In addition, do storage costs vary by airport?
So from the storage related costs for US carriers, it depends on what data is publicly available from the airlines. Again, my chart was just, I thought it was an interesting point to show, and so it's using just kind of averages. So I think I kind of touched on that in terms of what the average cost would be on a per aircraft basis for for reactivation. So that could include kind of, you can look at that to see what the return to service cost would be based on that. Again, it's going to be averages. If you're looking for specifics, I would suggest just kind of getting in touch with some of the storage facilities to look to see what the cost would be on a specific aircraft basis. And they vary by airport. I think depending on the facilities, there may be some variance, but typically I think you're still trying to be competitive as opposed to other storage facilities. So I think the costs are. I reached out to a few parties in terms of trying to get their views, and they were all pretty much in line, looking at different areas. So I think that they represent a fair average for the costs beyond tied to that. Sorry.
Then we have another question from Richard. In March, Qantas raised 1.05 billion against 7 787-9s. So that's 150 million each. Today, it said it raised 550 million against 3 more. That's 183 million. What can we conclude from this value-wise?
It certainly, those are data points that I look at as well in terms of trying to get a sense for what airlines are doing. You have to look to see what the differential is in terms of whether it's out of the 787-9s, or the vintage is the same as the ones that they've recently used to be able to raise the funds, and the kind of the devil's in the details in terms of what the structure is behind each of those. I think to me, on a 787-9, 183 million is a bit high. So I don't think that's necessarily accurate based on some of the data that I've seen out there. So you have to be careful with the amount of information that's out there without kind of knowing ultimately what's behind each of those deals, because the details will typically vary in some cases quite a bit. And so if you don't have that available, it's a nice data point to have, but it doesn't necessarily kind of tell you the specifics of what aircraft they're actually trading for.
The next question is from Eddie. How do you see the parts out market playing out? Will there be a glut of engines and parts values driving values down? And what will the impact be on engine OEMs and MROs?
So, I mean, the part out market, the feedback that I've gotten is definitely that I think a lot of the part out firms are struggling right now, where they've had quite a bit of the activity that they were expecting slow down quite a bit in terms of, I think, some of them by more than half. So that will drive, I think, their ability to go out and bid on certain certain packages, certain aircraft types. I think that what I'm seeing today will also allow them to also focus on maybe assets that they haven't been able to focus on in the past, just based on the level of competition that we had seen over the last couple of years, where, typically I think the sweet spot for at least for some of the part out companies that I deal with, is kind of in that, 12 to 15 year time frame or age for the aircraft. And, from the last couple of years where the competition was super high, right, it became a lot more challenging just because the people were overbidding for those. And I think so for those that have the ability now to be able to use some of the capital to invest in airframes and engines that they feel are going to be around for the foreseeable future, I think that they're able to take advantage of certainly a market that is much more attractive to them. Keeping in mind, that there are certain types where they'll probably won't even touch, just based on the perceived risk of the future of that airplane. So to answer the question, obviously and that's one of the things that I've looked at, when you kind of try to get a sense for how residual values will be impacted. On the part outside, to me, that has a direct correlation to how that will be impacted. And the feedback that I've gotten on from some of the part out guys that I deal with is, even on let's say narrow bodies that are viewed as, still in demand, whether it's A320s or 737 NGs, whereas before they were paying somewhere in the $3 to $4 million for an airframe. Now that pricing's gone down to more like 2.5, right? So it kind of shows you the declines on there. On the engine side, that is there's still going to be demand, especially with some of the larger fleets. I mean, if you look at the 737 NGs or A320 family, it's such a large fleet that the demand for engines should continue to be there. I think that in the interim, as an airline, I think you're probably going to use whatever you have in-house in terms of spares, or taking engines off of aircraft that you may not necessarily want to operate in your schedule, to be able to support the remaining fleet. And that will have an impact on everybody else, where that certainly will slow down, I think, the demand coming from third parties, whether it's engine leasing or whether it's engine maintenance. And so that ultimately drives the impact on the engine OEMs and MROs, which, from my understanding, they've seen a lot of some of the work orders that they had in place, kind of being on full stop until, airlines can see what their schedule is going to look like and what they're going to need going forward. I think the only bright spot to the industry right now is on the freighter side, where, even though I think on the passenger airline side, they've kind of put a stop to a lot of the maintenance or the work that they've had in play. A lot of the freighter operators are actually looking for any and all available slots to be able to meet the demand that has been pent up and that's there for them to be able to handle. So it's not obviously not in as large numbers as on the passenger side, but it's still there to provide at least some interim activity, for the MROs and for the engine OEMs.
We have a question from David Tritle. Are you aware of any unencumbered used aircraft deals that have been negotiated in the past month? What returns would investors expect today versus pre-COVID-19?
So in terms of actual deals, there's a couple that I've seen that I've been told are going to get done, but it's been very few. And a lot of and this is something that we started to see even prior to the crisis from the appraisal side, is that there was kind of two extremes to the market, right? Most aircraft that were traded typically had a lease attached, and those that didn't have a lease attached were then going and being parted out. And so I think that's kind of created this these two extremes that we're seeing, and I think we're going to kind of continue to see that in the interim. So there actually are certainly very few aircraft that are being sold as naked airplanes, and in the current environment where there is a lack of demand for capacity, I think that's going to exacerbate the issue. And so that's why you need to kind of look to find any indicators out there that can show you what the value declines or the lease rate declines will be, to be able to better portray what the market is doing out there. In terms of what returns would investors expect today versus pre-COVID-19 expectations, as far as I can tell, in some cases, most of the returns have based on some of the money that's been raised, whether it's on the debt side for airlines or whether it's on the capital markets, right? I mean, a lot of the interest rate environment has almost doubled for the airlines. So as an investor, which obviously I think each investor is going to have different expectations based on where their cost of capital is, based on what their strategy is. So I'm kind of focused on what the airlines are able to do at this point. But the answer is, I think the return requirements are going to be up just based on the higher risk profiles that the airlines are showing today, as well as the asset risk. So I think it's just going to go up.
Then our next question is from Christopher Skinner. We've seen the early retirements of legacy 747s and A340s. Are we going to see this bleed into the A380 market as well? Is there any hope for A380 valuations?
I mean, I think we've already kind of seen that bleed into the A380 market, where there are certain operators that have, even prior to the crisis, have talked about retiring the aircraft. And it's, to me, the A380 is it's a great airplane for certain markets, but it is limited as to which markets it can serve well. And so I think that what we're going to see going forward is there will be demand for some of the A380s to be used on certain markets, but I don't know if it's going to be in the numbers that could potentially become available from existing operators that are just parking the aircraft and focused on smaller, less expensive airplanes when it comes to maintenance. When you've got 4 engines and a large airframe, your maintenance costs can certainly go up very quickly. And so I think operators are very aware of that in this, especially in the current environment. And so we'll see where some of the applications will be. I think some new markets may get created, whether it's for Hodge operators or charter operators that kind of see some of the opportunities with such a big aircraft to be able to fill it. But it is going to be somewhat limited, in the secondary markets for the airplane. So the hope for the valuations, at this point, all I can say is that I think valuations are going to continue to decline for the aircraft. How low they're going to go, we'll see how the market reacts and where the demand is going to be.
And our final question is, do you think there will be another price war between OEMs to dump their aircraft, or will they be trying to stick to list prices as close as possible?
So my first comment is going to be on list prices. The OEMs just don't sell their aircraft at list prices. That's just never happened. So, I think from that standpoint, there has always been a discount applied to list prices. So I wouldn't necessarily go off of those to figure out what the value of an airplane is. We'll see. I think the one thing that I will say, I think the OEMs have done a good job of trying to defer deliveries as best they can to reduce the production rates based on where they feel the demand is going to be. And I think that will help to limit the oversupply of new aircraft. However, you know, in the environment that we're in today, where fuel is low, and you know, let's say a 737-800, you know, can do just as good of a job as a 737 MAX once it returns to service, may push airlines to kind of focus on the existing fleets that they have. I think that when that changes is when airlines start to incur higher maintenance costs, you know, to their older fleets, and so that's when you can start to shift the focus on the newer types, which, whether it's because of, you know, fuel going up, or whether, again, it's tied to maintenance. And so I guess to answer the question, you know, is there going to be a price war between the OEMs to dump their aircraft? I think that they'll do their best to not do that. But it's certainly, just like anything else, you know, in good times or bad times, depending on the campaigns that are out there, you know, if an OEM is trying to put a certain aircraft with a certain airline, you know, they have different negotiating tactics. And so you may see some of that, especially if there is that, you know, the push to get more aircraft orders in the interim. Although I think that most manufacturers, but most manufacturers are being somewhat realistic in terms of when to start expecting orders again. And so they're focused on, you know, let's deliver the aircraft that we have in our backlog today. Let's focus on our clients to make sure that they have what they need, and, you know, try not to oversupply the market so that ultimately it affects the values and lease rates of our aircraft.
And that's it for all of the questions in the group chat. Does anybody want to ask Gueric a question over using their voice? Going, gone. Okay, well, there's certainly plenty of questions there for Gueric, and some great discussion. Gueric, a few people have asked for your contact details. I'm sure you're okay with us sharing that?
Yes, of course.
Okay, fantastic. Yeah, in fact, Gueric's information is actually going to be on the slides. So if you are a subscriber, you'll be able to see that on the slides. But if not, just contact me. So you may have noticed that over the last few weeks, we've had lots of guests coming to speak. So just a reminder, if people would like to send to me their requests for, you know, what they want to hear about, or if they want to be a speaker, that is much appreciated. This is a community, and if you've got knowledge to share, we would love that. Our presentation next week is about the UAS and UAM market, how it's playing a role during this crisis, and, you know, what's the opportunity for aerospace suppliers in the long term. So thank you everybody for joining us today. It's been a great session, and we will see you again next week.
Great. Thank you very much.